The opinions expressed on this program represent the viewpoints of individual authors or contributors and do not necessarily reflect those of Troy University.
Hello and welcome to EconVersations. I'm your host, Dr. Dan Sutter of the Johnson Center for Political Economy at Troy University. Mobile phones allow people to pay for groceries and gas, adding convenience to our lives. In Africa, phones have also been used to allow the introduction of mobile money, which has been a remarkable innovation. Economic development is closely related to financial development, and Africa has lagged behind other regions in both areas. But the past decade has witnessed the emergence of mobile money, which should also help in economic development as well. And mobile money provides an important lesson on the spontaneous emergence and development of the institutions in our economy. That is, when market forces are allowed to operate free from government control and interference. Joining me today on the show to discuss lessons from mobile money in Africa are Dr. Malavika Nair of the Johnson Center and Rahimat Emozozo, a Troy University master's student in economics. Mel, welcome back to the show.
Thank you. Thanks,
And
Dan.
Rahimat, welcome to
Thank you.
EconVersations. So before we get started, Rahimat, if you could tell us a little bit about yourself, and you're currently a master's student here at Troy in our MA in Economics program. Tell us a little bit about yourself and how you got to Troy University.
Yes, I did my undergraduate at the State University of New York in Old Westbury. I studied politics, economics, and law. And in 2014, I moved to Georgia to work in consulting, and I found out that Troy University was starting a new program in economics, and that's how I got to Troy University. And I'm originally from Nigeria, and I moved to the United States in 2007, sorry. Yeah, and I've been here since.
Mm-hmm.
Well, we're happy to have you here, and you've done very well in our program. So
Thank you.
Let's get started here. Talk about this topic of mobile money, and to understand what an important innovation this is in Africa, we have to start by talking about something that's going to be maybe perhaps quite unfamiliar to viewers here in the United States. That's the idea that in many African nations up until very recently, we had a very large unbanked population, was described as unbanked population. Tell us a little bit, like, what does this mean, and what does it mean in terms of your everyday life in Africa versus here in the United States?
Yes, so in most countries in Africa, most of the developing countries, for an individual to find a bank or any type of branch of a financial institution, they have to travel a lot of miles, and that kind of excludes them from the banking market, and they don't have access to financial instruments like bank balances, electronic money. So it makes it difficult for people to transact over long distances, or to basically do regular things like pay bills.
Mm-hmm.
So the fact that M-Pesa was introduced to Kenya was a major improvement to the whole financial system, and not just Kenya, but Africa as a whole.
And to understand some of the impacts of this, I mean, if you were trying to start a business and you didn't have access to a bank, it sounds like it would probably be nearly impossible, right?
Right. So the importance of savings, right? You know, for economic growth, that's the wider story that's going on here, right? You need savings, and you need access to those savings from those that have the savings, and that's what a financial system does in any economy. It takes savings from those that have extra and gives it to those that need it to start a business. Now, where a financial system or market isn't working or isn't existent, you're going to see a lack of economic growth, and that's exactly what we see in Africa. That's one of the large problems in Africa.
So what was sort of historically the source of this lack of access to banking? Because I understand that in many developing countries they certainly have banks, and certainly have banks like in the cities, but it's just like a lack of banks available in the rural areas.
Yes, there are banks in major cities, but apart from that, a lot of these countries, they're very dispersed, and they have a lot of population that reside on the countryside. So where you have banking institutions located in the city, it still makes it difficult for majority of the population to have access to this kind of institution. So you're leaving a large chunk of people outside of, I guess, financial inclusion.
Now, the problem that countries in Africa faced up until relatively recently is not that different from one that we faced here in the United States back in the 1800s, and I think also in England, was sometimes referred to as a small change problem. If you could tell us a little bit about that issue.
So in remote areas within the United States or even in England during the Industrial Revolution, there was a problem of small change, meaning that there wasn't enough currency or cash to make small transactions for various reasons. But each one of these episodes, we have many examples of private provision of such things through either a company issuing scrip or tokens that were redeemable. You could go to the company store and buy provisions there, or even private manufacturers basically coining their own small change coins and putting them into circulation and competing with one another.
So this is a problem that has arisen at various times throughout economic history. A common one in Africa until very recently. So let's talk about how, what was this recent innovation of this M-Pesa and this mobile money that's been able to change lives so much in Kenya and other countries?
So M-Pesa was introduced in 2007 by Safaricom, which is the largest telecommunication company in Kenya. Mobile money existed before then. I think it originally started in the Philippines, but it wasn't as big as basically it was in Kenya. So when you have mobile money in Kenya, the reason why it spread so rapidly because the ability to use mobile money was very easy. So all you needed was a mobile phone. And with the recent development in technology, mobile phones have become increasingly cheap. So all you need is a mobile phone, not a smartphone, just a regular cellular phone. And to send money to somebody else, you just need to send a text message. So mobile money is pretty much safe and secure because all text messages are encrypted. So you can send money to anybody, maybe someone that's like 500 miles away from you in an instant. And to register for M-Pesa, it takes about less than 3 minutes to just register. And you don't need any financial institution like a bank account to verify you registering for M-Pesa. And the reason why M-Pesa was able to do so well so quickly is because most people in Kenya were already on the Safaricom network using it for phone calls and text messages. So it made it very easy for them to integrate mobile money into their company and to make it accessible to most people in Kenya.
Yeah, because otherwise that would seem to be a odd thing to say, like, well, why is your cell phone company now going to be offering money or financial services? But there's actually another way in which this sort of makes sense as well, in addition to the fact that everybody already had them, or many people already had the mobile phones. But it turns out you were explaining in your research that they were already using a transfer of minutes on these cell phones as a type of, almost a type of monetary exchange, right?
Yes. This isn't only native to Kenya. In a lot of African countries, even in Nigeria as well, what people did is when they needed money, they would ask a relative or a friend to send them airtime, and then when they get that airtime on their phone, they will go to an agent, an airtime agent, and then sell the money, the airtime credit to the agent and get liquid funds for that airtime. And that was kind of a way they used to transfer money from one person to the other over distances. So basically, M-Pesa or Safaricom's mobile money basically just, I guess, formalized that process and made it, a direct transfer of money through phones.
In in taking advantage of the existing cell phone or mobile phone company was also important as well, because there's a trust issue anytime you have a new financial institution, right?
Yeah, with money especially, right? Because money is a medium of exchange, and so we only hold it or use it because we know someone else will take it from us. So there's this, in order to start a new money, there's a large chicken and egg problem. So using an existing network is really quite genius. You know, being able to kind of superimpose this type of money on top of an existing phone network works really well, and that's why it's had so much success.
Well, that brings up a good question, and that is the question of is this mobile money that we're talking about here, is this really a form of money? Is this like a new form of electronic money? I mean, people might have heard of Bitcoin that we've talked about in previous shows on here. And so there might be some confusion here. What exactly is going on? Is this a new form of money, or is it an existing money?
So M-Pesa is an inside money. It's backed by outside money or fiat currency, as opposed to Bitcoin. Bitcoin isn't backed by any particular currency, and it's quite Bitcoin is quite versatile compared to M-Pesa, which is stable. So you could redeem your M-Pesa for Kenyan shillings. So there isn't any worry or there isn't any cause for concern about being able to redeem your money anytime you want to.
So it's not a new currency. It is the Kenyan currency, the shilling, that they're putting to work here, right?
Yeah, they're backing it up. Yeah, the Kenyan shilling is technically backing it up.
And so then, if you were going to open an account, then you'd have to have some shillings that you could put into your account with Safaricom?
Yes. So they have agents, Safaricom agents, basically everywhere. So the same way you'll be able to put phone credits into your phone, as easy as it was, that's how easy it is to put mobile money into your phone. So you go to an M-Pesa agent, you give them whatever amount of cash that you want to put in your phone, and they credit your M-Pesa account that same amount of money for a minimal sum. The fee to put money in your M-Pesa account is very minimal, so it's very affordable to basically everybody.
But then again, in some ways, this the money that once you have it on your mobile phone account and your M-Pesa account, it's also in some ways serving it as money, isn't it?
It is. It is. The fact
then how would we just, as economists, what do we mean when we refer to money? What are like the functions of money?
If you can buy and sell, right? I mean, if it's performing the function of medium of exchange, if you can actually go and buy things with it, if people will exchange goods give you goods in exchange for it, and if it's done at a wide level, that's what makes it a currency. So it is being used as a currency by people.
Are people able to do other types of banking services with M-Pesa? Like, for instance, can they take out loans at all?
Okay. No, they can't take out a loan, but there is a company called, there is a program called M-Shwari, which is basically like M-Pesa, but it's meant for, it offers short-term loans, so a 90-day loan. It's attached to M-Pesa for those who want to loan a small amount of money. So that M-Shwari is separate from M-Pesa, but you could attach it to your M-Pesa account to allow you to loan money for a short amount of time. So
it's legally restricted. That's important. I think if it wasn't, we would probably see a development going from just issuing money for transactions to issuing money and loans for credit purposes. But we don't see that here because it's legally restricted. So unlike other free banking and free money episodes where banks would be issuing their own banknotes and then that would be used as credit, basically. That is not developing here, but that's not a natural outcome of the market. It's actually just legally restricted.
Now, it might seem like a very odd thing to see a private company innovating in sort of like the financial or especially the monetary sphere here, because this is really close to being money, but actually, if we consider our history of money in economies across the world, that isn't anything new, is it? Right? Money evolved long before governments took over the issue of money, right?
Yes.
So money is what money does, right? So in order for something to be a money, it has to be used and actually exchanged by people. And it turns out that money has been, many forms of money have existed through history, including, shells and salt and cattle and, and then later gold and then paper. And now, most recently we have fiat money. But of course, money comes about as an organic institution from the market.
And that this is a tremendous example of what we refer to as spontaneous order. And, like we say, like, who created money? The answer is, well, nobody.
Nobody.
Nobody and
people's
everybody.
actions. Yeah.
And it's this really intriguing category of emergent institutions.
Just like
in
who
society.
created language, right? I mean, people had to individually accept certain norms, and it's the same thing with money. Individual actions, kind of just trying to maximize their own utility, lead to the emergence of this institution.
And so now this mobile money has really changed things, probably almost as radically as like ATM machines here in the United States made our lives much easier compared to the olden days when you had to go to the bank and the banks had very limited hours versus the ability to get cash anytime. This is really changing lives across Africa, isn't it?
Yes, it has. The mobile money has basically brought about more implications than anticipated. For instance, most businesses in Kenya, they accept mobile money, which is kind of different from Bitcoin, because Bitcoin is not as accepted as, something like mobile money. So you could go to a coffee shop and pay with M-Pesa. You could go to a market and pay with M-Pesa. And one of the great things about M-Pesa is that if you're a foreigner and you're coming into Kenya for a visit, as you're at the airport, you could basically hand in whatever money that you have and have mobile money or M-Pesa put in your phone. So you don't have to worry about being robbed or worry about security of having cash with you. And also, it has also created an avenue for different people to trade. So now you could just, start a small business, and you don't have to worry about bookkeeping and everything associated with having like large amounts of cash and worry about safety and security and spend money on safeguarding your cash. You have your money on your phone, so it makes it easier and safer for especially women to transact and to run their businesses without having to worry about security concerns.
And the percentage of the population that's without access to financial institutions, that's really come down in Kenya, hasn't it?
Yes, it has. Prior to mobile money being introduced in 2007, there were only about 25% of people with an actual financial that were actually engaged in the financial sector or had any kind of banking accounts. So after M-Pesa, or the introduction of M-Pesa in 2007 and onwards, the number drastically increased. So you have about 78% of people that have a financial institution, and right now Kenya is the leading African country with any type of financial inclusion and financial institution. So it's the most engaged financial country in Africa as of right now.
Now, in the introduction, I said that there's a strong relationship between economic development and financial development. So, presumably, this expansion of the financial sector, increasing the percentage of the population that's banked, is going to be related positively to economic growth in time, right?
Yes, absolutely. And this is one of the reasons why the central bank has taken the stance of, okay, M-Pesa or mobile money is doing so great, and the amount of trade and exchange and the percent of GDP that flows through mobile money transactions is so large and so unexpected that they have taken an unexpected stance compared to other African countries that have mobile money, who are very, who the regulators or the central bank are very involved and very set on regulating the sector. Kenya is so different that they understand that the introduction of mobile money has done so great for their economy that they want to allow it to continue to, do what he has been doing all this time.
And I think that's a really important point. But I guess some people have claimed that although this has been a great innovation that's come from the telecom company like this, that perhaps Safaricom could be making too much money off of M-Pesa. They now have this system, lots of people are using it, there's lots of benefits from using it, but perhaps they are charging too much for their services. And so if we did have a monopoly in a market, what would, as economists, we would sort of expect to see competition to come in. So have we seen anything like that happen in Kenya?
Yes, we've seen, right now there's quite a lot of telecommunication companies and other financial services companies who have started issuing mobile money ever since M-Pesa came into the market. So initially, Safaricom, which was the producer of M-Pesa, had control over the market. They had the largest share. They still have the largest share, but that share has reduced due to competition. And in 2014, they were forced to drop down their prices significantly. So that's just a result of competition, growing competition with other mobile money companies. Like you see, we have Airtel, Orange Money, Ucash, Equity Bank, and there are several others. They're not as big as this ones, but they're still there. And we still have different companies coming up with the issuance of mobile money.
And I can just imagine if you've got even additional mobile money companies beyond M-Pesa, I mean, as you have even more and more thousands of agents able to accept money, then any part of the country that wasn't being served very well by M-Pesa is going to get can be served by one of these rival companies coming in, right?
Yes, absolutely.
Yeah, that's the beauty of competition, right? Like we see this large company starting out, but then there's so many competitors and they're gaining the share, and it's also because they're undercutting on prices, and you see Safaricom having to reduce their prices. That's exactly what we expect to see in a competitive market. We just don't ever get to see it in a money, in a money commodity very often. So that's why this is so remarkable that you're seeing, competition in a money, and prices are falling, and there's more competition, and it's pretty remarkable.
And this threat of competition is going to be enough to hold M-Pesa's rates in line, right? Because if they got too high on their rates, they already know they face some competition. They could face a lot more.
Yes, absolutely. So initially M-Pesa had 100% of the market, and then here it says it has 70%. This was in 2011. Now it's about 68%. So you can see the gradual decline of M-Pesa's market share because of the new companies that are coming into the market, and all this serves the customers in the end. So there is no need for regulators to worry about regulating the market and trying to prevent M-Pesa from having this monopoly dominance over the market, because the market is doing it by itself through competition. So that problem is elevated.
And as long as M-Pesa is serving their customers well, then there's no particular number in terms of their market share here that shows a problem. If they're doing a good job, and they can keep 3/4 of the customers, then if they have to do it through competition, then the only way they're getting so many customers is that they're doing a good job.
Right.
Now, one thing and certainly in the recent financial crisis in the United States, we've certainly seen that financial institutions can face a risk of failing. And so are there like financial system risks or issues that could arise with mobile money? Would there be some concern about even leaving aside the rates that they're charging, because maybe competition is going to keep them from earning too much in the way of profit, but could they cause some kind of a risk of something similar to what happened with the financial crisis in the United States, or a failure of financial institutions causing a macroeconomic slump?
I think there's a risk associated with everything, but it's just the level of risk. For example, M-Pesa, most of their reserves is kept with a commercial bank. So they're required to keep 100% of their reserves in a commercial bank. So you don't have to worry about them risking your money and not being able to redeem your money the next day if there's any kind of trouble. So that problem is basically relaxed, so you don't have to worry about that. That's I guess that's the difference between M-Pesa and the banks in America, where they're only allowed to keep a certain amount of reserves and they're allowed to invest the rest. M-Pesa, your money is basically safe compared to
So it's basically like a 100% reserve.
I mean, it's not a bank.
Yeah, it's not a bank.
So it's just
if you wanted to think of it in analogous terms. There. Now, another issue that seems to be arising with mobile monies is one of control over the money supply for a central bank. And I guess we should probably mention a little bit, like, what exactly is a central bank? Because almost every nation now, well, Europe has a European central bank, but every nation has a central bank. And like, what's the difference between a central bank and an ordinary bank? And like, what does it mean for them to have control over the money supply?
So central banks are institutions that are in charge of money supply, monetary policy, as well as bank regulation, and they are, as well as interest rates, and so they are in charge of, overseeing what is going on with the money supply, what's going on with inflation, is it getting out of hand, should we play with the interest rates? So that's basically what their job is.
And if money is on, if we have mobile money and that money is changing hands, if it's analogous to like bank checking deposits, in a way to make exchanges using the mobile money, then is that like expanding or increasing the money supply? And if so, could there be some macroeconomic consequences of a central bank not being able to control the money supply?
So not in this case, because like she said, the M-Pesa itself is kind of legally restricted from the credit business. So if they were allowed to issue loans, using mobile money, that could have an impact on money supply. But because it's just purely an inside money, transaction where it is literally backed up by actual cash, it's not actually affecting money supply. But it could if it wasn't legally restricted. We don't know how it would play out.
And Rahimat, you said earlier that some other countries in Africa, their central banks have taken a less accommodating view towards mobile money, right?
Yes. In Nigeria, for instance, the first mobile money was introduced in 2009. And you would expect, since Nigeria has the largest economy in Africa and the largest population, you would, with the same kind of financial situation where a large population is excluded from the formal banking sector, you expect the mobile money that was introduced to do, reasonably as well as M-Pesa. But that wasn't so, because the Central Bank of Nigeria has already taken the stance of, monitoring and regulating the mobile money. And the restriction they place on mobile money is that all mobile money has to be done through an actual bank. So it can't just be a telecommunication company. They have to be partnering with an actual bank, and it has to be done through an actual bank. And that doesn't solve the problem that was solved. That doesn't help solve the problem that was there in Kenya, where you don't need an actual banking institution because there isn't that much banking institution to start in the first place. So restricting mobile money to just being produced by an actual bank makes it difficult for it to kind of spread as much as it did in Kenya.
Right, it defeats the purpose.
Yeah, it defeats the purpose.
Well, thanks very much for coming on and talking about this. This has been very fascinating, and I think I've learned a lot from this discussion. I hope you have too. Join us again next time for another EconVersations.